Hello guys and welcome to today's video. Obviously it is a market recap. I didn't take any trades, but I was looking at the markets, I was analyzing the markets. I backtested though today. I backtested right around hold on 10 like 20 20 trades. I backtested 20 trades. That was very boring. I mean, backtesting is not fun at all. Like, you sit down, you fucking analyze the charts for multiple fucking hours. Like, I started backtesting at right around 5 a.m. and I complete by 10 a.m. Like, 5 fucking hours backtesting. That's my mind just blew off, bro. I couldn't focus on anything else. Then I took a little bit of rest. Then I started analyzing the real market after that. So I found this setup appeared, and at the end of the day, I concluded that the problem is not my strategy. The problem is the price action. The problem is definitely the price action, and it's not my strategy, because look at this trade. If I took it, I would have crash out just a few pips to hit the take profit. But it is what it is. It's just an example to show you guys how I take my trades. So clearly you can say we are still trading in an uptrend right here, and by that I looked for the daily. Hold on. Come on, bruh. I looked for the daily. We took out previous daily highs. Those are the previous daily lows. Hold on. The previous daily lows. Then on the 4-hour, there is a bullish fair value gap right here. I said, okay, the last time that were a fair value gap, price reversed it, so I'm into that shit. There's a fair value gap. I was really interested to see price comes up, took out this buy side liquidity on the hourly, and price right when London session opened, it came down. Those were the Asian session lows. This market came down just a little bit by a few pips, and I'm going to explain. There's something that I concluded by doing these backtested. I'm going to tell you about it later. So I saw this little bit of sweep work. I said, okay, we took out Asian session lows. Then what do I look for? This inversion of the fair value gap and this inversion of the fair value gap. Then what are we looking for? This is the fair value gap. Then we broke structure on the 5-minute. We broke structure. We invalidated bearish order fill on the 15-minute. There's a fair value gap. We failed in. Hold on. No, we didn't fill out equilibrium, but yeah, we didn't fill out equilibrium. But there were a breaker block right here and the fair value gap. 1-minute break of structure. Hold on. To be honest with you, I will not take this trade on my basic daily basis trades, because this is not a very accurate trade to take. This is not very confirmed trade. This is not what I typically trade off of. So target these buy side liquidity, these highs, and just like that, getting edged by a few pips, then price reverse to take out your stop loss. And the reason of that is because we changed character on the hourly time frame right here. We took out this internal sell side liquidity, buy side liquidity, internal range liquidity. By the way, it's right that we didn't took out the Asian session highs, but we took out internal range liquidity. Then we broke structure. We made the market structure shift, retraced into the order block, retraced into the fair value gaps. The imbalances got filled on the lower time frame. then the breakout structure on the lower time frame, and you could have been entered your trade properly. Like if you see, hold on London session, it's right that this is not the London session high end, but it's a internal range liquidity, and the internal range liquidity is that price in the movement of the trend, price comes up and seek out liquidity to continue the order flow to the downside or the to upside, whether the trend is uptrend or the downtrend. So basically what happened is price came up, we took out this liquidity, internal range liquidity, and then price seek down, broke structure to the downside, reversed to the order block and equilibrium. On the lower time frame we fell down this imbalance, and right when we do a breakout structure on the 1 minute, I guess right here, you can enter right here your stops above these highs, and what you're targeting these previous daily lows, and just like that, a winner trade. And there's something I've noticed by the backtesting while I'm backtesting, is that I'm going to read it for you. I type it out on a notebook. The first one is that if we are in a downtrend, I need a liquidity sweep to the upside, then a breakout structure to the downside, and vice versa for the uptrend. I need a liquidity sweep to the downside and then a breakout structure to the upside. Because I've written this shit because lately I've noticed that I'm not recognizing the reversal from the continuation of the trend in the market. So that's a note to take. The second one is that you can target the fair value gaps, the 50% mark off of them, as it draws on liquidity. So for the higher time frame, like, hold on, let me give you an example. Like for example, for this bullish for our fair value gap, if anyone took a sell right here and pretty much sheds his take profit at the 50% of the fair value gap, he could have been bangered this trade while everybody else is sitting there to take profit right here, and maybe they put the stop loss at break even, they got stopped out right here by this candle. So the fair value gaps are like a draws on liquidity. The third one is that if you are looking for a session lows and highs, look for the low to confirm it's a down candle, and I get like faked by this shit multiple fucking times. I don't know if I see a example of this, but you understood what I'm saying. Like the down candle is for the low, and the high is for the up candle. And if you see a down candle while it's the highest point of the session highs of the session overall, it's not a high. You need to change the time frame and look for the up candle, for example, to spot on the session highs. That's another note to take on. The fourth one is the liquidity sweep doesn't count if it's a few pips, like this one on today's trade. This one, hold on, this is what I called a sweep of liquidity on Asian session lows, when it is not. It's right when that we pumped a little bit, but it's actually not, because we didn't take out any liquidity right here. The actual sell side liquidity is right here, and it's right here. If price anywhere want to reverse, it's going to be in here, or if we make some sort of structure right here and we come down, we took out this sell side liquidity by like something like this, and then this, and then this, then it will be a liquidity sweep. But something like this, trust me, it's not trustable, because it may flip on you by any seconds, like this one. So, and the fifth one is that don't get married to your bias because it can be changed while price action is moving. And this I got tricked by a lot in my trading. When I confirm my bias, when I look for the higher time frame, obviously I confirm my bias from the scaling up for the scaling down from the higher time frame to the lower time frame, but the actual confirmation of the bias is that off of the daily and off of the 4 hour. Then if I see the 4 hour and the daily bearish or bullish and I'm executing off of the 5 minute and on the 1 minute, and I'm targeting the draws on liquidity on the 15 minute, then the bias might be changed for some reasons of the price action, like right here. Look, I got faked out by this tiny liquidity sweep. Then I thought price is going to get even through this Asian session highs. I just set out this limit is buy side liquidity just to be less greedy, but I got married to this bias. Overall, you see that we changed character on the lower time frame, but on the higher time frame we are in the uptrend, and I got wrecked by that thing, and that's not how we should trade. So that's another point to add on to my trading. So these are the 5 conclusions that I came out with, the pretty much 20 trades backtested on GBP GPY. Tomorrow I will do the same on USD GPY, and also tomorrow I'm getting the job. I'm going to job for a whole week, I guess, just for some money to invest in crypto. And there's something I love. Oh damn, bro, it's painful to watch. Literally yesterday I bought more crypto. Literally yesterday I bought more crypto when we were here. Like, look, I bought, like, hold on, AVAX, and I bought right here, I bought right here. I'm just like a fucking whale. You see, when the whale is that whenever you sell they buy a lot and price increase. I'm the completely opposite. Whenever I fucking click buy, the price just reverse. It's just a dumb block. I don't know, but wherever the thing is, I don't give a fuck. I accept the risk. I took the risk and I accept it. Literally, like, no FOMO, no homo, like anything. I don't give a fuck if I lose my money. It's true that I worked for it so fucking hard, and it's only thing that I have right now because I'm going all in. That's literally the last fucking penny I've had. I just put it into my crypto and my trading account. So that will not be a good position if I lose them, of course, but I completely accept the risk, because no risk, no story, no risk, no Rari. So take that as a fucking little quote for you. And just like that, we completed today's video. I hope you guys benefit from this video. I will catch you guys up tomorrow with the crypto updated video, what happened in this week specifically, why did I bought more, and everything. So stay tuned for tomorrow's video. It's going to be lit. And without that being said, thank you guys for watching. I appreciate you guys. Peace out.